Alphabet as a company is, what do they sell, and how they generate their revenues. They have actually two main business segments, which is Google Services and also Google Cloud. So under Google Services, they break down into two different segments, which is Google Advertising and also Google Other. So under advertising, it's mainly about advertising on their Google Search, their YouTube, and also different types of online channels. And for Google Other, they are actually made up of three products, which is first of all the apps, Google Play, followed by their hardware, which is listed down here, and also the YouTube TV Premium, which is their subscriptions. Whereas for Google Cloud, this is what they are offering for the public. And finally, because Alphabet actually are involved in various AI-related research, so they actually has another segment called Other Bets. So under Other Bets, these are some of the companies that they involve and invest in to research on AI-related field. So you can see here, there's autonomous driving, in healthcare related, and also different types of moonshot products. What are the AI R&D projects that Google is currently carrying on? So from here, we can see that there's a total of about 24 AI projects that Google is involved in. And here, you can see that it's a really whole lot of lists that involve in different areas and different industries. And now let's look at how does Alphabet actually generate revenue. In 2022, they actually generated about 282.8 billion. And from here, we can see that almost 80% of their revenue actually comes from Google advertising. And then about 10% comes from Google Others, which is in apps, hardware, and also content. And finally, another 10% comes from their other business segment in Google Cloud. And Other Bets only contributed a mere 0.4%. So when ChatGPT was being launched, this is one of the reasons why Google actually launched a red alert, because if everyone changes from Google Search to ChatGPT to look for information to generate some text-related articles, then here a lot of the revenue will be lost. So right now we will have a quick look at their financial numbers, but this is just a quick screening of the company. So for Google, the revenue has been increasing year on year, which is a positive uptrend, and this is considered a tick based on value investing methodology. Next, when we look at the EPS, overall the trend is in a positive consistent uptrend, and 4.59 means that for every one share that the investor purchased, the company is able to generate about $4.60 of earnings. And now the cash flow, operating cash flow, is also a positive consistent uptrend. And finally, we are pleased to see that the debt to equity ratio is actually below 0.5. So overall, from a quick screening on this company, we say that this is a company that I'm interested in, and maybe I should further investigate to see that whether is this a good company to buy or not good to buy. Because even though a company is good, when it is too expensive, you have a high risk that in the event that the company is having some issues and the share price drop, you might end up losing money, which is why we say that even though here looks good, but we need to do further investigations.